If you're running a successful e-commerce business on Shopify, Amazon, Etsy, or your own site, you already know that pace never slows down. With revenue streaming in from dozens of platforms, tax complexity can hit hard. Are you confident you're making the most of the new tax laws, deductions, and charitable giving options for 2026? Or are you wondering if you'll get tripped up by an IRS rule that you didn't see coming? For those of you who don't know me, my name is Daniel Miller. I help entrepreneurs, business owners, and high-income earners steward their wealth with purpose and generosity. I've walked alongside many online sellers as they've moved from side hustlers to leaders in their space, guiding them through the legal, tax, and planning pitfalls unique to digital businesses. My passion is to empower you to keep more and give more confidently, knowing your foundation is strong. It only takes one missed deduction or accidentally blending those PayPal transfers to invite IRS questions, or worse, overpay on your tax bill. As e-commerce keeps multiplying revenue streams and regulatory headaches, it's crucial not just to work hard, but to plan smart. Today, let's break down the 2026 must-knows, maximizing the deductions you're entitled to, elevating your charitable giving for strategic benefit, and leveraging new retirement plan options. And lastly, maybe the most important, staying out of an audit territory as your business scales. Maximizing deductions. Don't leave money on the table. E-commerce makes for a tangled web of expenses. You have platform fees, ad spend, inventory storage, packaging, tech subscriptions, remote staff. Each of these can be deductible, but only if you keep clean records. For 2026, keep this in mind. Section 179 deductions. The deduction cap is $1.25 million in 2025 and going up in 2026. That means if you buy new equipment, say a high-end camera for product shots or computers for your remote team, you can write off the full cost this year if you put that into service by December 31st. Proper documentation. Save all your receipts from digital ad campaigns, document every business purchase on payment platforms, and separate business from personal, especially with processors like Stripe or PayPal. Home office and mileage. To claim a home office deduction, the space must be exclusively business use. Track miles if you're picking up inventory or doing local deliveries. Automation tools can make this process seamless and audit-resistant. Shipping, transaction fees, and more. Everything from postage and fulfillment fees to software and payment processing, like Stripe, Amazon, Shopify, is a real deduction. These fees add up fast. A typical six-figure store might be able to deduct $10,000 to $30,000 per year in digital infrastructure and shipping alone. Elevating your strategic charitable giving. Timing is everything. Many e-commerce owners experience income spikes around major sales events. Use those years to boost your generosity and lower your tax bill. Donor advised funds. If you had a blockbuster Q4 or big launch, consider bunching your years of gifts for the maximum deduction. Donor advised funds are perfect for gifting appreciated assets, such as stocks or even crypto earned through your store. These allow you to support charities over time. The deduction floor for 2026. Stay up to date with this one. A new 1% floor for corporate charitable giving means that deductible gifts now have to exceed 1% of your taxable income to be counted. And make sure you're always donating to IRS qualified organizations. Digital records. Whether you're adding a charity checkout feature or donating profits, remember this: only direct donations from your business are deductible. Track everything very clearly for your CPA. Leveraging retirement contributions. Do not overlook this wealth builder. Even owners who max out business deductions often underuse retirement savings tools. If you're a solo owner, a SEP IRA or a solo 401k plan allows high contribution limits that scale with your income, helping you move profits out of the business and into long-term investments. Team options. A simple IRA and a group 401k let you offer team benefits and score deductions on the employer matches you make. The tax impact? In strong earnings years, maxing your contributions can radically cut your tax bill and let your money grow for decades, not just the next sales season. Avoiding IRS red flags? Stay audit proof as you grow. The IRS watches e-commerce closely. Here's how to sidestep the pain. First, report every revenue stream. Collect and report all 1099-K forms. For 2026, broker and platform reporting thresholds are back in play. Worker classification. Don't misclassify your contractors as employees, especially if you use lots of remote help. Multi-state sales tax. Selling across state lines? Use dedicated software to avoid costly pitfalls. Separate accounts. Blending personal and business on your digital wallets and the IRS will notice. Dedicated business accounts and software make compliance smooth, especially if you're growing fast. CPA guidance. Partner with a CPA who gets e-commerce. Ask about the new pass-through SALT deduction workaround for LLCs and S-Corps if you're in a high-tax state. We've covered a lot here, and this information is not intended to be a substitute for specific individualized tax advice. I suggest that you discuss your specific tax issues with a qualified tax advisor. Tax planning for e-commerce entrepreneurs isn't just about keeping more dollars. It's about building margin, giving generously, and creating space for your vision to grow. If you want every dollar working as hard as you do, reach out for a personalized consultation to bulletproof your plan and align your business with your values. If today's video gave you actionable insight, don't forget to like, subscribe, or share with a fellow founder. You'll find links to my contact information in the description. Together, let's make 2026 the most intentional, impactful year yet for your finances, your generosity, and your business.